My name is Will McIntosh. I'm Global Head of Research for USAA Real Estate. And what I'd like to talk about today is the demographic trends that we see happening in the industry that are affecting our economy. It's affecting our business in a significant way and certainly affecting investments in real estate. With that, looking at some of the demographic trends, we see that population growth is decelerating. In other words, the population is going to be growing slower, and perhaps something that's more important is the fact that it's going to be driven by immigration. Immigration in the future is going to have a tremendous impact on our economy and the real estate markets. Another thing that's happening is our population's aging. And particularly with the baby boomers, which is our largest age cohort, we're seeing that that group is going to be dominant in our economy going forward. And what's happening is as people age, they're spending less money, and the money that they are spending, they're spending on senior care, health care, and it has implications for the type of real estate that'll be in demand. And another thing that's happening that's very important is that our workforce, our working age population is declining significantly, and we're going to again become increasingly dependent on immigrants. So what does this all mean for real estate? Well, it means that we should see significant demand over the next 10 years for certain types of real estate like senior housing, and healthcare related real estate, medical office real estate. We also should see a significant demand for markets that are going to be increasingly and are currently attractive to immigrants. Cities in the South and West, for example, are going to be very attractive. Major cities that have large concentrations of immigrants like New York and Washington, D.C. are going to be increasingly attractive. With this as a backdrop, one of the things that we're noticing as well is that we're seeing a significantly declining long-term interest rate. If you look at the trend in the 10-year treasuries, it has been declining significantly over the last 4 decades. Following this level of risk-free rate has been the bond rates and real estate yields as well. And we think that given the slow growth economic environment that we're likely to find ourselves in, that we're going to see another 10 years of low interest rates and low real estate yields. And for real estate, this means that we're likely to see more capital moving into the alternatives, including the real estate. We're likely to have a lot of capital for real estate investing. It's likely going to keep cap rates down, perhaps below their long-term average, and maybe somewhere between the trough that most markets and property types are currently in today to the long-term average. And so I think that's the environment we're going to find ourselves in, and you can see it playing out with core real estate already. We've enjoyed generally over the long-term core real estate returning in the 7 to 9% range. Currently, it's in the 6% range, and forecasts have it declining all the way to the 5s. So that's the environment where we're likely to find ourselves in going forward. And as we think about our strategies as to where we invest and how we invest, we need to take this into consideration. It's going to be challenging for our investors, but the opportunities are still going to be there.